market's higher across the board here, but of course one stock failing to participate in the rally, and that's Facebook. The stock still heavily traded and under pressure today on the heels of that IPO. Take a look, down 10% on Facebook now at $34.40 a share. The company's stock, a flop, is fueling the firestorm of criticism toward the Nasdaq today. Take a listen to Knight Capital's Tom Joyce about the handling of the IPO earlier today on CNBC.
The failure was Nasdaq's. It was Nasdaq's failure. This was arguably the worst performance by an exchange on an IPO ever.
Which Bob Greifeld has acknowledged anyway. That big news conference spoke with you last night, and he was humbly embarrassed about what happened,
yeah.
right?
And they're changing the system to use the typical system that they use for opens and closes during IPOs now.
But is Nasdaq really to blame for this downturn in the stock? Joining us, Hedge Eye's Daryl Jones says, yes, it is. On the other hand, though, Lee Munson, a portfolio asset management, believes the stock was doomed to begin with. And Lee, I mean, you feel it was overpriced. No matter what happened with the technology, you wouldn't have bought this stock anyway, right?
No, I don't think so. And remember what was happening on Friday. We had 12 down days out of the last 13. Hadn't seen that since October 1974. Fundamentally, Marky Z and the Funky Bunch wants our billions of dollars, but don't provide us an idea how they're going to make money off of mobile apps. And traders wanted to, flip it and rip it. There were plenty of shares traded on Friday to get this stock higher. It failed to do so fundamentally.
I think we also, should also recognize, though, that Facebook raised $16 billion in a tough tape. So, yeah, it was a flop, and I'm still getting emails from viewers telling me that they still haven't gotten their confirmations. But you got to also, look at this firm and say they were able to raise $16 billion in a market that has a tape that's down 12 out of 13 sessions for the Dow Industrials, and all these concerns about Europe as well. Isn't that right, Daryl?
Exactly. I think on one level, this is a very successful IPO. They raised $16 billion. The issue here was really with the Nasdaq. They just didn't have the ability to manage this process. When an IPO starts trading, it's all really about sentiment. And when a trader can't get it confirmed for 2 hours, let alone 2 or 3 days, now like we're seeing, there's no positive sentiment around the new issue. So, people that are in it for the short term just get out of the way because there's no transparency. And unfortunately, that's what Nasdaq traded here, lack of transparency for the trading community.
Yeah, but you're making this, I think it's naive to make an excuse that this was Nasdaq's fault. Facebook had the chance to be heir apparent on the primaries here to take over the golden apple rally. Gold's lost its luster, Apple's maturing, and Facebook had this opportunity, yes, Maria, to raise $16 billion, but this was big. And because we didn't see that pop, don't tell me it's the Nasdaq getting late confirms. If people really wanted
was it
to make
Morgan
Facebook
Stanley?
center place,
What about
it would
Morgan
happen.
Stanley? What about increasing the size and the pricing of the deal?
I think it was a combination of both Morgan Stanley and the Nasdaq, but at the end of the day, there's no debating here. This was a successful IPO for the company. The company raised $16 billion. They raised it at a great valuation. Unfortunately, there's no transparency in the market, so in the short term, traders just sort of walked away.
I think people.
Let's
I don't think
bring
this was
Bob
successful.
Pisani in here.
We're in a
Bob.
brave new world.
Go ahead, Bob.
Well, there's two separate issues. One is what happened with the Nasdaq. Now, here at the NYSE, 2 minutes or a minute before the IPO starts trading, they freeze the book. They say no more orders, no more cancellations.
Right. The Nasdaq does that as well. The Nasdaq does that as well.
They're changing to doing that. No, they're
just not at
changing to doing
IPOs.
that.
They don't do that at IPOs.
Right. They're changing that now to do that with what the NYSE does. So there was a process problem that happened. So that's different from whether or not the stock is fairly valued right now. I think they did a great job, Morgan Stanley, in pricing the stock. They ended up at $38. There was a lot of sell orders today, but it ended at $38 on Friday. I don't know if it would have opened at $55 and closed at 38, everyone would have said the mom and pop really got hosed on the deal.
Yeah, but it didn't.
Daryl, don't you think one of the things they're blaming this on is the overwhelming number of order cancellations that came in at the last second as the book was being closed, or it wasn't being closed at the right time. Do you believe, though, you're putting the blame on Nasdaq, but if we'd seen an overwhelming number of buy orders without the cancellations, that we would still be talking about this today?
Well, I think I'm saying two things. I'm saying Nasdaq was some of the issue in the early trading. The other issue is probably on some level Morgan Stanley or the underwriters. If the people that wanted to buy the stock didn't have the transparency, and what they were coming in at the last minute was canceling orders because they didn't know where they were going to get filled, then there's something to be said about the underwriters there. Once again, they create a situation where there was really a lack of transparency and a lot of volatility in short-term trading, and there was no support for this new issue. The flip side to that, though, is Facebook still got a great valuation, still raised a lot of money, and on some level, I'm sure they're very happy in Facebook land right now because they did their job in this IPO.
Oh, I'm sure
Yeah,
they're
and then
happy somewhere.
Mark Zuckerberg got married.
Exactly. He was euphoric about that.
Right.
Lee, is there a price at which you would buy Facebook?
You know, I would say, first of all, if I have to have some type of idea of how they're going to make money, especially in the mobile app arena, I also want to see where the cards fall as far as like what people actually think it's valued. I don't see buying this for another 30, 60, 90 days. I think people will have a chance, but to say I'd buy it at 25 or buy it at 30 or buy it at 40, I think it's ridiculous. I don't think this was successful. I do think that the Nasdaq is a completely separate issue, but I think investors got to look at this this did not work. The only thing that happened here was $16 billion. That was successful into these people's hands in Silicon Valley. It doesn't help investors. By the way, what did Google do with almost $2 billion when they raised? It landed in the bank.
Yeah.
Didn't go anyplace.
Bob Pisani, I mean, it's been no official comment from the New York Stock Exchange, but we all know that they've been high-fiving around here today.
Yeah, they're not going to say anything officially, but you can bet that this is going to be incorporated into their presentations on IPOs, that there's an adult here who will make some decisions. I'm not sure whether in the long run it's going to make a big deal, but for the moment, I don't think they need to say anything.
All right. Classy there. Gentlemen, thank you.
That.
Bob will be checking back with you.
Thank you.
See you later.